Thanks for joining us here on a Monday morning. I'm Marlon Bowling with you as we watch your grain and livestock market activity. And we're going to be talking right now with Brian Splitt of Allendale Incorporated. He is based in McHenry, Illinois. And Brian, we just got some new numbers that came in here moments ago. I just was handed them as I came walking in the studio here. So let's take a look at these numbers together. It's the export inspections from last week. On the corn, we have a total this time around of 979,006 tons, and then we had the week before 993,045. So pretty consistent there, maybe just slightly less. On the sorghum, 105,951. The week before was 222,000. Now I recall that was a very heavy week there for the export inspections last week. On the soybean, 685,697 compared to 492,537 tons a week before. And on the wheat, we have 586,149 this week, almost identical to what we had the previous week, just a couple of thousand tons more than what we had a week ago. So, Brian, as you look at these numbers here at first glance, do they really mean much to the trade today or not?
A minor message maybe. Corn, pretty steady with last week. Beans a little bit better than last week, and wheat steady with last week. But really, the only one better year over year would be the wheat inspections. Corn and soybeans both lower than last year for the same week. But I think the trade's really still geared up for the report that we have on Thursday. Everybody wants to know what kind of a yield adjustment that USDA is going to apply to corn and soybeans, and I think that's the expectation is we should see yield down. Corn expectations averaging out around 166 bushels per acre. That seems to be pretty reasonable. If you look back at the history of yield reductions from July to August report and apply the same percentage drop in yield during those years, excluding 2012, it would give you a 166.4. So it seems to be a pretty reasonable statistical estimate for yield from the USDA for this report Thursday.
Well, let's focus on our current trades. And on the corn market, we opened about 3.5 cents higher when we started out our daytime session today. Now we're actually adding to it a little bit. December new crop corn now trading 4.5 higher at 385.5. That is on the high of the day, I might add. And on the soybean trade, let's go with that new crop November contract. We're now 8 3/4 higher at 965.5. And we're still about 2.5 cents away from our high of the day there, but we have rebounded off the low from overnight by about 6 cents. Now looking at the wheat trade in Chicago, we have September 3 3/4 higher at 458.5 right now. That's a penny and a quarter off of its high of the day. Kansas City, we have September now trading a penny higher at 460.5. And if you look at the Minneapolis spring wheat trade, we now have that September contract still up a nickel at 721.25. By the way, the cotton market had opened up firmer this morning. We're still hanging on to gains. December now at 70.87 per pound, and that would be 25 points higher on the day. It got very close earlier to 71 cents already. It's at 70.94 for the high of the day, but now at 70.87. The Minneapolis market here, the spring wheat adding a nickel here this morning. Brian, your thoughts on this wheat trade? Can they add to that spread between the Minneapolis and the other two exchanges or not?
That's still going to be where the overall crop concern is that particular spring wheat variety, and again, where the crop for your winter wheat crops is more known. We're still going to be looking at additional adjustments for the spring wheat. So a yield reduction there on this report will impact prices.
Okay, we're going to pause for a break, and when we come back, we're going to take a closer look at our cattle and hog market activity today. We've had some pretty steep losses on the cattle side. We'll review when we come back. We're back with you talking with Brian Splitt of Allendale Incorporated in McHenry, Illinois. We're going to talk a little livestock market action right now. And Brian, right before the break, I alluded to the fact that we have a sharply lower cattle trade again. Let's take a look at the futures. Let's go to live cattle right now and take a look at the big board. We had triple-digit losses earlier today, and the feeder cattle trade also had triple-digit losses. Right now, the August live would be down $1.45 on the fats. That would be at 114 even. And that happens to be on a new low for the day as we bring it up. The October contract down $1.45 at 112.65, now 112.68. 3 ticks from its low of the day. We have December down $1.23 at 113.95. A footnote here on live cattle. The August contract goes into delivery today. Looking at the feeder cattle side, let's switch over there. August down $2.55 at 147.40, only 15 cents from our low of the day. September down $2.53, last trade 148.32, and October down almost $2.50 at 147.45. So, Brian, I understand that we had higher slaughter rates last week. The weights seem to be coming up as well. We have higher beef production. That all seems to be weighing against what's going on in the cattle futures.
Yeah, and you're finding all this information coming out with the futures at the upper end of a range that we've been in for the last 2 weeks. So, when you get that information, it's very easy for traders to commit to being a seller, and they've got a very reasonable risk-reward in doing so. We had some highs a couple weeks ago in August at 115.65, and last week's highs were 115.62. So, it looks like it could be time to go back down towards the low end of the range around 112, and then we'll look for new information as far as cash trade as we go into, the expiration of August here.
Are you seeing any asking prices of note today?
I haven't even looked yet. I've been focusing mainly on this corn market here today. I'd like to get this corn market up another 4 or 5 cents before this report. That would make me happy.
How much impact does that directly have on the feeders these days?
Well, in general, when you look at the idea of cheap corn and cheap corn being around longer, that will increase demand for the feeder product. And if there's a shift in the mentality for the possibility of higher corn prices on a longer-term time frame, that can hurt demand on a long-term time frame for feeders. So there's generally the inverse relationship, but it doesn't always have to work that way. I mean, markets have their own fundamentals day to day, and sometimes the big picture stuff and the little picture stuff comes in at different time frames, but that'd be the day-to-day relationship that you'd be looking for.
And it's interesting this at the same time that there was a top executive at Tyson saying they expect beef demand to really be on the upswing for the next several years, or stay strong for several years. So now we're seeing the markets go down by triple digits right after that. Lean hog trade, I want to take a look over there. Right now we have the August contract back up 18 higher again at 83.40. Where is the top in this market? October 82 higher now at 67.60, only 2 ticks from its high of the day. And now you have your December up 43 at 61.88. Brian, always a pleasure to talk with you. Thanks for weighing in on the markets. Appreciate it, sir.
You bet. Thank you.
Brian Splitt of Allendale Incorporated in McHenry, Illinois.
All right. Thank you once
There go
again.
the hogs again.
Thank you very much, Marlon.